Okay, hello and welcome everyone. It's Saturday, October 5, 2024, and I'm your host, Jason Allen, and this is Net Winning Trader for Saturday, and this is our weekly Forex market outlook for the week ending today. And I want to say, first of all, thank you all for coming. I appreciate you taking some time out of your week to give me a listen. I hope I got something of value for you today. I want to go ahead and get started right away, but I want to go ahead and remind you we got to take a minute here and make everybody happy because we all know how much these regulators are helping us. They're just making life so much easier for us, aren't they? And just got to remember, could lose money doing this. None of us out there probably know that, right? How long we all been trading here? I've been trading almost 40 years. And how long have you been trading? But just in case you didn't know, there's a risk to this. It's important for me to tell you all that you could lose money. People can and do lose money trading. It's not for everybody. You should carefully consider whether trading in futures, options, or Forex is really right for you or suitable for you in light of your circumstances, knowledge, financial resources. It's really not for everybody all the time. You can lose more than your initial investment. And that's just tragic. Also, everything we talk about here today is opinions and market data and methods or trade discussion. All of it is just opinion and points of view. So it can change at any time. And because of that, any results that are shown are hypothetical, and there's no guarantee or warranty, and there's no promises made. And everything we talk about in here is for educational purposes only. So now that we have basically said there's no way to make any money doing this, and what's the point because it's all just blathering on anyway. Now that we're all clear on that, let's go ahead and get to making some money today because that's really why we're here, right? All right, so that being said, let's get to work. So this week, we saw some interesting resilience in the US dollar in spite of all the facts that keep coming out. Um, we had some mixed economic signals on the U.S. and overseas, with the dollar actually ending up finishing at some of the best levels of the week on Friday afternoon after non-farm payrolls. But economic data from earlier in the week was a little more inconclusive. UK GDP on Monday was below expectations. US PMI was above expectations. Tancon report from the Japanese, a little better than expected at 34, showing a little bit better expansion, but still not really showing huge growth. Everybody is really suffering right now. Tuesday, Euro manufacturing a little better than expected. CPI for the Eurozone also a little better than expected. But the Euro did see a little bit of a sell-off early in the session, and then U.S. JOLTS data came out. And that was over expectation. Euro saw a little bit of pressure then as well, and into Friday, more pressure. Wednesday, German unemployment was up slightly. U.S. GDP a little better than expected, but I think that was baked in the cake. We were expecting data to come out that would be positive for the dollar, but a lot of that I think the market already really took that into account. So we didn't see much of a reaction heading into Thursday's Eurozone PMI data across the board, which showed expansion. UK PMI, that was a little bit of a miss, though, suggesting some stagflation there. But USD unemployment claims were as expected, no real change. So some mixed signals there as well. And of course, ADP, which came in on Wednesday, was a little better than expected. The preliminary unemployment report to what we get on Friday's big news non-farm payrolls, which showed a little bit better than expected growth on Friday. So that's when the dollar just took off, scoring highs against most pairs late in the session through the end of the day, holding that for the close. Expectations into next week are for more U.S. dollar strength early in the week, but I believe that's going to be a fade. I think if you were patient with a little bit more dollar strength coming into early in the week, maybe Monday into Tuesday, Wednesday you should start to see it sell off, and I think we'll get a correction a little deeper on Wednesday, Thursday, Friday to end the week. I think the U.S. dollar is getting a little tired, a little toppy, and I think we're due for a little bit of a pushback. I think you can buy that pullback when the time is right because big trend numbers haven't been violated yet. In other words, the dollar appears to be under near-term uptrend. The economic data keeps pushing the dollar slightly higher. Traders aren't stupid. There is a possibility that they're going to get a little profit taking hunger in their accounts, and we're going to see that neutralize any further dollar strength. So we get a little bit late buyers coming to the table in the dollar into next week early. They'll be disappointed by the end of the week. That's my take on it. So with that little bit of buying pressure near term, we're still up against some important technical numbers that I think those are ready to be enforced heading into next week. So next week, news is not as heavy. German CPI on Monday, monetary policy and press conference on Wednesday. That could be a game changer, but I don't think they're going to change rates. Japanese light GDP. U.S. we got CPI, PPI, Michigan sentiment on Friday. That could be a mover if that comes out. Now you got to remember, everybody knows the economy really isn't doing that good, regardless of what you hear on the news. So Michigan expectations, consumer sentiment, when that all comes out, that could miss. People saying, look, it's really not as good as we'd expected it to be. That'll take the wind out of the sails real quick in the dollar, in my view. British pound, GDP again, unemployment outlook, industrial production. So, we're going to see that heading into the next few weeks as we get closer and closer to the U.S. election. I think it's my point of view that the markets are anticipating, um, we're not going to have any good news near term until after the election. Once we find out whether or not it's going to be 4 more years of the same BS, or there might actually be someone in the White House who knows what he's doing, then that change in sentiment will come later. Between here and there, I don't think it's going to be all that positive. The dollar, I think, is gaining just because it's anticipating. I think it's anticipating there's going to be some kind of a change. You know, uh, but how accurate is that change going to be? And of course, if we get a change in economic potential, I don't think that can come without a political change, because I think the policies that are driving U.S. sentiment right now aren't real good ones, at least not from an economic standpoint. So, what do you do with that? You kind of take a wait and see attitude, maybe cover your shorts that you've had on for months and months and years, or do you get ready to have to make some serious changes? I still remember this like it was yesterday. 2008, the world was looking at, the U.S. was just soaring, and we had some really strong economic numbers come in. And then 1 month before the election in November, when it was very clear that Barack Obama was going to become president, um, the markets just hit the fan, and stock sold off, what, 50%? I mean, those. I'm not saying that's going to happen here near term, but the markets aren't stupid, and under certain kinds of leadership in Washington, which is why we're electing our next 4 years worth of economic leaders. If we elect the wrong kind of people, then there's going to be some economic change develop. Right now, I think the market's kind of anticipating that we're going to have a little bit better quality economic uh, leadership after the elections in November and into next year. So we'll see how that plays out. That being said, I want to get right to a couple of thoughts that are going to be important for you near term here, because when we talk about trading, as I often talk to when I talk to my students and other traders at netwinningtrader.com, one of the things we talk about is that trading is really, it's 100% psychology, really, more so than anything else. Um, you've got to be in a position where you can monitor and enforce certain kinds of thinking and certain kinds of behavior if you intend to win. And I thought, that being said, there's some important parts to that thinking, to that psychology, that we tend to miss day to day, moment to moment, unless we're really focused in on what we're doing. And I thought today's quote might be really apropos uh, from a standpoint of managing and monitoring our own psychology, which is so important to what we're doing. And our quote today is from Jedi Master Yoda, and he says, "Either do or do not. There is no try." And I think it's important that we take this point of view about what we call our self-talk, the inner dialogue that we have with ourselves when we're deciding if we're finding an opportunity. A lot of people approach their trading just like they do everything else, and that's one of the reasons why they don't do as well at it. Well, I think I'll try this, or I'll give it my best shot. Well, you can't win them all. Their thinking process is full of incongruity, lack of commitment, non acceptance of results, things of this nature that are fine for the real world because you always can get a second chance. But in the trading environment, you may not get a second chance because once your money's gone, it's gone. So, what are you going to do? You've got to take control of your thoughts, and you've got to take the mindset that either you're going to do or do not. There is no try. You're not going to try to get better. You either are going to get better or you're not. There's no, I'm going to try this new method of analysis. No, you either are going to do the new method of analysis or you're not. If you're going to really win at this business, you've got to raise the bar in your personal thought and personal activity and personal choices so that it's the highest that you can make it for yourself, and you're going to do it at that level. If you fall short of that, you have not achieved that full level. It's not, I'm going to try to get better. It's, I am either going to do this at this level or I'm going to miss the bar. Do you want to be the guy that misses the bar? No. But you're never even going to get off first base if you approach this business from the mindset of I'll try. That's never going to work. You're not going to try anything. You're either going to do this at the level it needs to be done, which means making hard choices, hard sacrifices, hard commitments, or you're not going to do it at all. It's going to end up taking your time and effort and money and putting you back in the poorhouse. And we don't want that for anyone. So to win, take try out of your vocabulary. Raise the bar of excellence and performance in your own mind, and then strive to be at that level all the time. And if you're not there for some reason, that's just a clue that you need to raise the bar and stick with that performance. There's no, I'm going to try this out. You're either going to do it or you're not. Okay, let's have a look at some charts here briefly. I've got to come over here to this software and make a choice over here. Make sure we get the charts up again. Guys, let me know if you have the window captured here. What happened here? Uh-oh, we got to turn this off first? How does this work? Hold on a minute. Window capture. How come it didn't change in my window? It's just irritating. Why is it not changing? I'm sorry, guys. It worked perfectly last week. Now it's not working. So, how do I switch this from what it is to what it is? Window capture. Window. Nav Suite Trade Navigator. I just put it up. It's not changing. Why is it not changing to the next screen? All right, do you guys see the screen up here? Can you guys see charts? Tony, can you see the charts? I'm not sure if it's properly doing what it's supposed to do. This is not yet. Using drop down on right or change right, it did that. Now we can see it. Okay, good. It's the delay that's infuriating me. All right, now that we have this up, good. Let's get back to work. This is pounds on a 60-minute time frame, and again, real briefly, want to just mention this real quick. As you can see from last week, our trend line coming in here violated here, and quite frankly, the downtrend looks much more secure now. One thing I want to remind you though is that whenever you're looking at trending, in order for security to really be there, what you need is you need for the moving averages to follow along that trend line. So when you look over here at our initial trend line previous, Monday, Tuesday, the market went below the averages and outside the trend line. That's the clue that maybe something is changing. Then by the middle of the week, you could see we're clearly uptrend is over, downtrend might be starting, and by the end of the week we have downtrend. Now this right here, on a larger time frame, I'm going to come over here to the 240-minute time frame. This is just really bringing us back to previous support. It really isn't indicative of a change in underlying sentiment yet. I personally think it's going to be a buying opportunity. More dollar strength will push pounds, I think, in the early part of the year, maybe a little deeper into previous areas around the 29.50 zone. I think that would be a buying opportunity. So regardless of what you're looking at long term or short term, here, let me put up the daily for you. You got to remember, you want to be on the side of the averages under trend. So if the averages on the daily time frame, which is where the professional is, are still under the buy side, you're in the buy zone, buy mode. 50 is over the 100. They're both tracking higher. And your trend line after correction could easily come into play in this area here. So we get down to the 29.5, 29 area. That's on trend for a potential uptrend that looks very good from last April. And that's what I mean when I say I think the dollar really has more downside than upside. The upside that we're seeing, I think, is corrective in nature. Euro, I think, is the same basic clue, but at the same time, Euro is a lot more aggressive to the downside. In fact, you have almost no, it didn't bounce at all. I mean, it just kept right on going. And your averages showed pretty clearly that we had what's typical when we talk about this on Net Winning Trader, how markets tend to operate. They operate in only three modes: uptrend, downtrend, range. Uptrend typically ends in range, followed by downtrend. So Euro basically put that in play. Uptrend, ended in range. We've got downtrend now. That, of course, will end in range down here somewhere. And if we look at a higher time frame, say the 240, you can see that the Euro, a little bit even further down to the 108.40 area, 108.60, is still going to be on trend on the daily for a possible uptrend. You know what I mean? So I think you're still somewhere, well, a little bit lower here. I really do think it's along the 100 bar for the daily time frame, which would put it right here, 109, 108.50, 109 area, maybe a little higher. But I like that area for uptrend right here. Along, in other words, this corrective move in the dollar. How do corrective moves typically happen as well? Remember, they're hard, fast. They happen quickly. So here's our double top, and the market sells off hard and fast, and then it'll bounce right here, right back to those highs near term. And that formation, for those of you that are maybe follow along in the past, that's what I call beach ball underwater. The market, you push the market is pushed down, and the beach ball goes deep into underwater, and then when the pressure is released, the ball comes right back to the surface. That's basically what's happening. The selling pressure here is not long-term thinker. It's more short-term. Let's have a look at Japanese yen. Again, pretty exciting move when you really think about it. You've got a sell-off from last week on a 60-minute time frame where the market gave back everything it made last week plus more into Monday's open this week and traded down to the 141 area. By the end of the week, we're at 149, 800 pips. Not a bad move to the upside at all. However, this move I think is still corrective. If we look at the 240 time frame, take a look at where the market sold off from. And we have a degree of near-term support. Basically in this area here. And we have what might be considered a bottoming range right here. In other words, we could be looking at the market coming down to a bottom and moving sideways. Now, it's on a big enough scale that you could make an argument that we went from downtrend range to uptrend developing. And I can say that that's possible. But I don't believe it's possible near term because of this. If we look at the daily, look at where we came from. The 161 area, this was a 39-year high of the dollar against the yen. 39-year high when the economic condition on both sides of that trading arrangement are not the best that they've ever been. I think this was a little bit much. Down here is the same lower prices that we saw at the end of last year. And all of that could be in a weekly time frame. All of this could just be consolidation and congestion before a potential move under the 140 handle to even deeper down to the 129, 130 handle. Not uncommon to see that at all. And I think that's what we're looking at. I think if you look at the averages on the weekly, we've gone to move sideways now. And we would probably trade between those if indeed this was a sell-off, pause that refreshes, resumption of downtrend. So I'm taking a longer term view, and that any further action higher in dollar yen I think is going to be a selling opportunity in my view. Canada is basically the same argument, but it's just in much tighter ranges. If you look at Canada from near term, you do have some uptrend here, right? But it doesn't have a real long way to go. $240 time frame, you can see you've got downtrend, sideways action, maybe a little price pressure up here at the 138, 130. I'm sorry, 136, 20 to 40 area, and then resumption of downtrend. And it's coming off some pretty high prints here. 2023 to October 23, April 24. We're only halfway right down the range to low prints that we're seeing closer down here at the 131 level. So it's a little bit tighter range, but there's still opportunity. And you'll notice that even on the daily time frame, the moving averages really don't say a lot about bullish sentiment here. It really says we're kind of trapped. Negotiating lower prices, I think, is more likely. So any further strength, I'd look for a stall right along these averages on a daily time frame, 36 and a quarter. The stall up in there, and then a little bit of a down move over the next few weeks or months into the end of the year, perhaps. So we start off next year somewhere under the 34.50 area. Again, it's not huge potential for the next few days or weeks, but I do think next week the opportunity is going to be fade dollar strength if we get any more upside. Okay, and that's it. Let's go back over here. And give me just a minute here. Okay, maybe that's not it. Let's do this. Whoops, got the wrong PowerPoint up there. There we go. And Tony, you can let me know when we got that as well as we can. Let me know when we got the screen back. Okay. A couple of quick questions here, real fast, while we get to wrapping up today's broadcast. We've got um, gold. Question on this: what does it look like topping? What's the mindset playing a role? Flight to safety and dollar possible gold action. Gold at all-time highs is a selling opportunity, in my opinion. Um, be careful because markets that make all-time highs tend to attract the public, and the public, of course, is the least informed, least skilled trader or investor or player in the marketplace, and they're always on the long side. They're not on the short side. So, for those of you that may not remember this, but when gold first traded above $1,800 an ounce about a dozen years ago, you could not find a gold bear anywhere. And every other commercial on CNBC was, "Do you got gold to sell? We're buyers. Take the fillings out of your teeth. We want them." Didn't matter. People were buying. And my first thought was, where's the sell? Everybody that could possibly want to buy gold is in. They're long already. There's nobody left to buy. So if there's nobody left to buy, how can that market advance? It really can't advance because there's who's left to buy it. And I suggested to my client base that they consider the sell side at some point, and some of them did. And the market, of course, within a year had lost a third of its value, which using futures or options was a huge amount of money. Does that potentially exist right now? I don't know if it does or not, but I do know that when markets are at all-time highs, they're not there to stay. It takes a lot of effort and a lot of new money coming into the market to push it even higher. That's typically the dumb money. So, in my opinion, I would look to find a reason to value the short side. Find a way to make sense out of possibly putting a short out there at some point. Um, I really personally believe that the market cannot go higher until it sells off first. If that sell-off is going to be 4.5 or 5 months long and represent 20% of the market value from where it is now, that's worth making the time and effort for because that's where the real big money can come from. So I would suggest that. Um, that's my thoughts on dollar gold. Um, good question, by the way. Any other comments or questions out there? As I'll be happy to take another minute or two on them. Excuse me. By the way, here's how you get a little more from the broadcast. Make sure that you want comments or questions, send them to JAJ at Net Winning Trader. Open a dialogue with me anytime. I had a couple this week, as a matter of fact, from traders that are interested in learning more. And again, as always, if you are finding what we share here to be of value, take a look at the full program that we offer. It's going to challenge a lot of your, what you would say, conventional thinking. And I think you're going to find that our point of view could be vastly superior to most everything else you've been taught up till now. And your results can improve exponentially. So have a look at netwinningtrader.com. Oh, and please don't forget to read all the disclaimers everywhere about how risky this is. Because the government really is on your side. They really want to help you prevent yourself from even thinking for a minute that you could build your wealth quickly and aggressively. They don't want you to believe that because that's not healthy. So make sure you read all the disclaimers about how difficult and frustrating and time consuming all this can be because we don't want you making any mistakes. Screen back to PowerPoint. Good. All right. Any other comments or questions, you guys? Let's see here. Doesn't look like it yet. All right. So again, consider me your friend in the business. Anything I can do to help you, I want to make sure and at least offer you that opportunity. Again, into next week, I would look for dollar strength early to continue in the week, and then a fade. Um, like I said, I think the world right now is really leaning more towards uh, watching the U.S. electoral process, and they want to make a decision as to what leadership we're going to get out of Washington economically after we elect a new president. Um, you know, it should be pretty clear that the economic policies that are currently in place are really hindering everybody. Um, why why our public would want 4 more years of that is beyond me. So I can't see a certain candidate being elected unless you want all your grandchildren to switch sexes. I guess maybe that's a better plan that they have. Um, but aside from that fact, economically and viability for near term, I think you're going to see the dollar gain a little bit more of near-term support, just because I think it was overdone to the downside. The upside corrects all that, and then we'll see a return to lower dollar prices again in the next few weeks, heading into the end of the year. And I think that that's kind of on the cusp right about now. A little bit more dollar strength for the next week, maybe early. Look for the dollar to fade, and if that fade gains some traction, 2 weeks from now we could be sharply lower. Um, what was it that I wanted to share with you? Oh, one quick thing, guys, real quick. Um, in case you guys didn't know, I broadcast here from the great state of Florida, just south of Tampa. And in this area here, we had just a major hurricane last week. And we lost power and got all backwards and upside down on stuff. And it looks like there's another one brewing in the Gulf right now this weekend, even though it's Saturday. By Monday, it's supposed to be a Category 2 storm with potential to make landfall around Wednesday or so, right outside my back door, apparently. So, that being said, there's a possibility that next Saturday we might be off air. Tony will send out a reminder like he normally does every Saturday, and in there he'll tell you whether or not we're on air or not. Only because if I got to bug out of here and get to higher ground, that could take a day or two. If I come back and I don't have a front yard, backyard, or a roof on my house, that might make broadcasting on Saturday a little more difficult. So that being said, we got to kind of leave an open door to the possibility of not being around next Saturday. But we'll keep you posted on it. We don't know. It could be a major scare right now and could turn out to be nothing. And then we'll be back looking at a new opportunity next week. Any other comments or questions? Are we good? Okay. Again, thanks again for coming, guys. Um, if you aren't currently on the mailing list, here's what you do. Go to netwinningtrader.com, and there'll be a button on there that said subscribe me to your email database. And just go ahead and put your email database on there, or put your email into our email database, and we'll make sure, because if you're listening on YouTube, maybe you're hearing us for the first time or second time, you want to be notified about what's happening and what else we offer, feel free. You got to sign up for that. So feel free to do that. Make sure to join the mailing list, and we'll get you notifications and all that good stuff. All right, guys, thanks for listening. I will see you hopefully next week, assuming that we're still here. In the meantime, good luck, good trading, and we'll look to count up some more cash next week. Have a good one.